So today I wanted to take a look at first-time buyer schemes with you. And I really want to start out by saying there's absolutely no silver bullet here. There's no magic trick that suddenly makes houses affordable for first-time buyers. What there is basically three different types of lender schemes that help first-time buyers to stretch affordability. Sometimes it's really sensible, other times not so. And if you don't fully understand not only how the scheme works, but the consequences of that scheme, then you could easily wind up buying the wrong property or locking yourself into a mortgage, and potentially even blocking your next move. And the problem is that first-time buyer schemes are marketed around the headline benefit, not the long-term consequences. So what we're going to do in this video is break down the three main types of first-time buyer schemes, what they actually do behind the scenes, when they genuinely help, and when they can very quietly cause problems later on. So if you're a first-time buyer or planning to be one in the next year or two, then make sure you hit subscribe and follow. This channel literally exists to make your life easier. So as a mortgage broker, I talk to a lot of first-time buyers. They're the group that generally speaking needs the most help. And the stories are often very similar. You're earning decent money. You've saved up a deposit. You've done everything you've been told to do. And yet the numbers still don't work for the house you want to buy. And you start hearing phrases like helping hand, income boost, springboard. And it kind of feels like everyone knows a secret that you've missed out on. But the truth's a lot simpler than that. Almost every first-time buyer fits into one of these schemes. But which one's the best one for you? So the first bucket of schemes is what we like to call income and affordability boosts. And in these schemes, the lenders are basically saying, for the right type of first-time buyer, we're willing to bend the rules and lend you a bit more than normal. You'll see these schemes marketed by various lenders under various different names. But the general modus operandi is always the same. They're offering you a higher income multiple or a more generous affordability calculation. And this can be genuinely helpful, especially if your salary is on the way up. But here's the important bit that doesn't get talked about. Being able to borrow more doesn't make that house any cheaper. It just means a bigger commitment. And in most cases, those boosts only apply when you take the first-time buyer part of the mortgage. So later on, if you want to borrow again to build an extension or move house or whatever else it is, you're no longer a first-time buyer. You don't qualify for that boost anymore. And because you're borrowing more money, the lender's going to reassess your affordability from scratch under the standard rules. You won't automatically keep those first-time buyer bonuses forever. So this type of plan works really well if you're confident your income is going to increase over time. Your outgoings are sensible, and you're not planning to stretch your affordability again within the first few years. And then there's the second type of scheme, family support, often called things like springboard or deposit-backed mortgages. This is where a parent or family member can put money into a separate linked savings account, essentially as a form of security. And that money isn't a gift. It doesn't form part of your deposit and it's not normally spent on the house purchase. But it gives the lender a really fuzzy, warm feeling that everything's going to be okay, and therefore makes them feel more comfortable in offering you a higher loan-to-value mortgage. And if everything runs smoothly, that savings account becomes unlinked after a certain period of time and the money's returned. So these can be really good if you've got a family member that wants to help out, doesn't necessarily want to give the money away permanently. But, and this is a big but, that support comes with strings attached. If you don't keep up repayments on the mortgage, your family's money can be at risk. And while that support is still being used, the lender may restrict further borrowing or flexibility. So again, if your plan is to buy now and then possibly extend the loan in a couple of years' time, you need to think very carefully before going down this route. It's not necessarily the wrong thing to do, but you need to keep an eye on those consequences. And the third bucket is income boosters, otherwise known as joint borrower or assisted borrowing schemes. In this, basically, you add another person to your mortgage, and that person's income is used to increase your affordability. It's often a parent, and it can sometimes be more than one person. The idea is simple. You can afford the monthly payment, but you can't quite borrow enough on your own income. Adding another person's income can create that stretch, and they won't necessarily be named on the deeds of the property. This is known as a joint borrower sole proprietor mortgage. And used well, this can be one of the most flexible options. No large lump sums to be tied up, just extra income that another family member isn't using to borrow against at the moment to support your application. But again, there are trade-offs. As before, if you're going to do any further borrowing, it's going to be reassessed on your affordability at that time. And of course, whether or not the person providing the income boost is willing to stay on the mortgage or not could affect that future affordability. So it's ideal for borrowers who expect their income to grow and want a structure that can be easily unwound later. So generally, when a first-time buyer says to me, which scheme should I be using? My answer is quite often, what's the problem we're trying to solve? Is the income multiple the issue? Is it the deposit size? Or is it just you haven't got the income to support the application? Once we know what the problem is we're trying to solve, we can much better address which bucket we should be pulling the solution from. So if you're a first-time buyer and you think one of these schemes might be right for you, then drop us a comment below. I'm Patrick Weightman, your local East Midlands mortgage and protection advisor working with clients up and down the UK. If you're looking for clear and honest mortgage advice without the hype, then my links are in the bio. Make sure you give us a like and subscribe. Speak to you soon. Bye-bye.